0.29%, two-year yield 2.11%. Big rally today for crude, surging 6.8%. West Texas Intermediate crude 111.81 a barrel, up $7.11 a barrel. Brent up 7.4%. The global benchmark up by almost $8 a barrel now to 115.86. So again, recapping, stocks lower across the board. The Dow, the S&P, NASDAQ all declining. S&P down by 0.2%. Among the names reporting after the close of trading today will be Nike. Nike shares down now by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, fascinating story online at Bloomberg Business Week about Silicon Valley's wealthiest Russian who built his wealth making lucrative bets on a few names that you know, Airbnb, Alibaba, Twitter, Facebook, and a lot more. He now, though, Tim, is distancing himself from President Putin.
We're talking about none other than Yuri Milner, who you may know from firms such as Digital Sky Technologies, also known as DST. Max Chafkin is features editor at Bloomberg Business Week. He joins us on the phone from Queens, New York. The story, by the way, by Sarah McBride, it's now on the Bloomberg terminal. You can also read it at bloomberg.com/businessweek. Also joining us is Joel Weber, editor at Bloomberg Business Week. He's with us right now in the Bloomberg Interactive Brokers studio. Joel, Yuri Milner, a name very familiar to people across Silicon Valley. He's been involved in some of the most, as Carol mentioned, the names that many people are familiar with if they use smartphones, Airbnb, Facebook, and more.
You mean not living under a rock?
Yeah, exactly.
Sorry.
Who is he?
Really prominent venture capital and has long been, as you mentioned, involved in a lot of startups that have gone on and had great success, which obviously made him very wealthy, the wealthiest Russian in Silicon Valley, actually. And obviously, you know, all things Russia right now are of great interest. And so when Sarah reached out and said, hey, I'm talking to Yuri, we said, what's he saying? And that's
for hours
to the story. Yeah, we got a lot of great access. And Max, who edited the story, I think did a great job of pointing out, you know, this risk for Yuri and all this, and how quick he is to attempt to put some distance between he and Putin, although not maybe as much distance as one would think. So Max, what jumped out to you in her reporting?
Yeah, I mean, what's interesting about Yuri, so it's not just that Yuri Milner is this really important venture capitalist. He's like right up there with, like, say, you think about the most important VCs of the last 20 years. It's like Mark Andreessen, Peter Thiel, and probably Yuri Milner. But it's not just that he's made a lot of money and made a lot of investments in companies you've heard of. It's that he's kind of put himself at the center of Silicon Valley. You know, he bought this $100 million house in Los Altos, which is really heart of Silicon Valley, has, spent hundreds of millions of dollars funding sort of tech-focused philanthropy. His events have been sort of hot tickets, not just among tech types, but also in Hollywood. And so, but of course, basically the seed funding here, as Joel's alluding to, comes from basically sources connected to the Kremlin. So there was some money early on from Alisher Usmanov, who is sort of a metals magnate, basically a pro-Putin oligarch. Another investment in Twitter. There was money from a Russian state-controlled bank, BTB. And the thing that's pretty interesting here is Milner has spent, as he told Sarah, basically years trying to put some distance between himself and the Kremlin. And in fact, he shared actually a lot of sort of new information. I mean, he hasn't seen Usmanov in 5 years. He hasn't been to Russia in 8 years. So he's basically making the case like, look, yes, there is a lot of money that I had early on that was connected to Vladimir Putin and the Kremlin, but it's been a very long time since I've taken any money from those guys, and really, this has nothing to do with me.
What I did find so interesting, Max, are the number of people who came to bat for him. You mentioned some of the folks who when you think of the most important Silicon Valley venture capitalists, right? Peter Thiel, Mark Andreessen, and by the way, all three of them involved in relatively early in Facebook. So that certainly says something there too. But who did Sarah speak to that really went to bat for Yuri Milner?
Yeah, I mean, there's, the story has a comment from Ryan Peterson, the CEO of Flexport, Max Levchin, who's a, well-known Ukrainian American, who's also, pretty close to Yuri Milner. And there were others that we didn't include in the story. I mean, the kind of tech elite has definitely circled the wagons to some extent, and they said, like, look, this guy really has nothing to do with what's happening in Russia. And of course, there is some truth to that, right? He hasn't made his money in the same way that many of these other Russian billionaires made their money, and he really has had some distance. On the other hand, right, you could imagine this does kind of color some of the stuff that's happened in recent years, and it's definitely going to be a challenge he has to work through as he raises money for subsequent funds.
All right. I'm going to just take us away for a moment, because one of the things that jumped out when I was reading, and all this is, distancing from Vladimir Putin, but that investment in SpaceX, like that he got out of kind of early.
Well, and that Sarah broke the news of.
Right, exactly.
That's the scoop. Yeah, that's previously unreported. And as we say in the story, in 2013, Yuri Milner put about $10 million into SpaceX. Now, that would not be a hugely consequential thing, except that at that same time, SpaceX was basically going around bragging about how, unlike other major defense contractors, including like the main one that the Air Force was using to launch rockets, SpaceX did not buy Russian engines. And they in fact filed a lawsuit against the Department of Defense, saying that their competitors were in effect funding the Russian defense industry, and so this was not disclosed, and Milner actually left, basically exited his investment 2 years later. He told us that it had nothing to do with this kind of concern over Russian money, that it was just entirely about his own judgment of the board of directors. But it is an interesting wrinkle. It's also interesting that it wasn't previously disclosed.
He doubled his money on that, went from 10 million to 23 million, and I'm guessing it would be a whole lot more had he held on to it.
Right.
So yeah.
Also a rounding error for him.
Helping potentially fight Putin in the war, since SpaceX has been rather helpful over there too.
All right. Well, it's a great story, and breaking some news there as well. Max Chafkin, thank you so much. Really appreciate it. As we mentioned, Sarah McBride writing that story.
Well, March is Women's History Month, and every day this month we're celebrating significant moments in women's history. Now with your installment for Monday, March 21st, here's Bloomberg's Renita Young.
On this day in women's history in 1969, women from the feminist group Red Stockings organized a public hearing entitled Abortion Speak Out. It was held at the Washington Square Methodist Church in New York City's Greenwich Village. At the time, the radical feminist group was furious that hearings about abortion featured only male speakers. The debate at the time focused on rape, incest, or health of the mother. The group wanted to provide women with a platform to speak out, share their experiences with illegal abortions, and shift the debate to what they believed, a woman's right to choose. That's today in women's history. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today in women's history. In just a couple of minutes, Carol, we are going to be joined by our friends at Bloomberg TV to count down to the close. And, well, we got a lot to talk about.
Well, man, Jay Powell really kind of shocking us awake again. And we did see both bonds and stocks sell off. We're bouncing back a little bit on the equity trade, but nonetheless, a lot to say, because it certainly felt like he had a much more hawkish stance, but we'll get into it with our TV colleagues. Right now, you've got the S&P down just 21 points, Dow a decline of 324, NASDAQ down almost 134 points. Bloomberg Business Week, this is Bloomberg.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in the trading session. Caroline Hyde, Taylor Riggs, we've got Gina Martin-Adams in the house over here. Meanwhile, we are joined by our colleagues Carol Masser and Tim Stanovic. We welcome, of course, cross-audience. We go cross-platform, TV, radio, YouTube to discuss, well, it is actually a heating up sell-off at the moment. 0.6% down on the S&P, but more dramatic moves on the NASDAQ. But it's all about the bonds, Carol.
Yeah, it's totally about the bond market. I'm glad you went there because I do feel like there's a fair amount of volatility in the equity trade, but bond yields really holding on to the gains, which made me scratch my head when I looked at bank stocks because they're down near their lows of the session. KBW Bank Index is down about 1.25%. You would have thought higher rates normally means good things for the bank stocks, but I do wonder if there's a little nervousness about what's to come, slowing economic growth coming off of Jay Powell and his comments, Tim.
Yeah, those more hawkish comments essentially saying that he's putting 50 basis points back on the table. Caroline, I'm really glad that you mentioned the NASDAQ composite and the way it was getting hit today, especially earlier in the day, the relative underperformer compared with the major indices. Perhaps not that surprising, given that interest rates now could be expected to go higher, and that could affect some of these high-flying tech companies that are traded on the NASDAQ, but really giving back some of those losses.
Yeah, let's dig into what you show of 1.1% loss on the NASDAQ, Tim, and we're seeing that off by 157 points as we speak. Really the underperformer of choice, but so too is the Russell 2000 off by 1.4%. So once again, small caps and these mega tech names sort of falling in tandem. What that is trying to signal about the future growth story here in the United States, the Dow Jones off by more than a percentage point. You thank Boeing for that. S&P 500, as we say, off by 0.6%. We're 27 points lower on the S&P, Gina.
Yeah, and a little disappointing there on the small caps considering we finally broke out of that major range last week. But sectors really just more of the same coming out of sectors. I mean, how much more can the energy sector outperform the rest of the S&P 500? But today's moves at sectors look exactly like the year-to-date moves. Energy, materials really dominating upside. Communication services, consumer discretionary, technology, some of the big cap growth stocks still a drag on the other end. And the result of that is an index that's really struggling to move much higher.
And that's really where I want to go when I take a look at some of the individual movers. Gina smartly mentioned some of the technology companies. Take a look at Anaplan now. We did this as our stock of the hour, you guys, in full disclosure, but it is jumping after Thoma Bravo agreed to buy it, frankly, for about $10.7 billion. Gina also mentioned the energy sector and some of the ripple effects of that has been into some other commodity sectors. Mosaic is one that we've been looking at. Caroline, the fertilizer price index is again at another record high. So you're starting to see maybe some investors turn back to some of the U.S. producers to really think about sort of this global commodity increase that we have underway. CrowdStrike is also interesting one to watch. It's actually lower, but it is interesting because Piper Sandler was saying that there's a really good demand environment. And we did just hear from the president saying everyone should be maybe prepared for what could be a slew of cyber attacks coming from Russia as their plan B or plan C doesn't go out as planned. And finally, Caroline, you missed this one. We did Netflix. Romain finally cut me off from his password. He can no longer share it.
Already?
I have to get my own. But I think what is interesting is Truist is now coming out and saying that it actually could be a modest tailwind to both revenue and earnings growth. The shares, though, today not reacting to that news.
Meanwhile, we do what Taylor really loves. It's not just taking people's passwords for Netflix. It is a bond market that is just showing phenomenal moves today. Carol, as you were saying at the opening of this conversation, the two-year yield, the rate of change, we're currently up, 18 basis points? We are currently, haven't been above 2%, of course, since May 2019. We suddenly pierce it and then some. And of course, it has all been about Jay Powell's conversation today, more hawkish tone. The market, he really is trying to educate. We are going to go up in interest rates if we need to tame inflation.
Yeah, Caroline, you know, the rate market, we definitely saw it moving up, and then Jay Powell just adding some, fire to that flame, if you will, or fuel to that flame. What's interesting is, in terms of parsing out some of what he had to say, here's the comment that I think many people noticed, and here's what he said at the National Association for Business Economics in Washington. He said, if we conclude that it is appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. And if we determined that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do that as well. And that certainly caught my attention, guys. And I'm curious, Gina, you also keep a watch on, corporate earnings. And I do wonder if that means he is willing to be much more aggressive at the risk of slowing down the economy. And I do wonder what that will mean, ultimately for corporate earnings.
Yeah, I think that's a very good point, Carol. And certainly we've been watching those revenue lines in particular like a hawk. What we have not seen is downward revision momentum emerge for the revenue lines. The analysts are still pretty optimistic, frankly, about the longer term outlook for growth. Will that change is a huge critical question. But I think when you think in the grand scheme of things, if your option is maybe a slowdown and a light recession versus a potential for stagflation really settling in, you definitely choose the first over the latter.
I was pretty struck when he was asked during the Q&A session if there was anything that would stop the Fed from a 50 basis point increase at a single meeting, and he gave a one-word answer and essentially said no. We saw a little chuckle out of the Fed chair too there. And I wonder though, Caroline, what actually changed between last week and this week for this more hawkish tone? I mean, what was the data that he saw that said to him that he really needs to express himself in a way that would lead people to believe that he's thinking in a more hawkish way?
Was it the market reaction?
Yeah.
The fact that stocks rallied, the fact that the market didn't mind. So now he's ramming at home. You've already got Raphael Bostic saying that we're not wedded to moving 25 basis points. You've got Barkin, you've got Waller, you've got Bullard. All of these other FOMC people have been saying, look, we're willing to go and go strong. Maybe he just needed to signal that a little bit more. But also what's changed is we've got Europe. The bond sell-off is there too. And it's interesting, we'll have Madame Lagarde speaking tomorrow. I think it's the BIS event that they're speaking at later this week. We've got so much central bank talk to digest.
I think what was interesting too, the comments about the neutral rate. And Gina, I do wonder, some of the research notes I've read that say if you go above that neutral rate, then you're searching for growth, and that will be the outperformer over value.
Yeah.
Do you agree with that statement?
I think if you go above the neutral rate, frankly, you're probably moving into a much greater slowdown than most people are anticipating, and it means you move defensively. I don't know that you move right into growth. You probably move defensively. You anticipate a weaker market until you finally find a bottom, and then you move cyclical. So I don't know that we really can make a very strong case for growth in this kind of landscape, frankly.
Okay, we hear more from Fed officials later this week. We have Michael McKee's exclusive tomorrow with Federal Reserve's of St. Louis President Jim Bullard, 8:30 a.m. Wall Street Time. So we'll be watching that one too.
Get ready for the swings, everybody. There's going to be lots more, I guess, to come. All right, we're going to continue our conversation. Our cross-platform coverage will continue on radio, TV, and YouTube. We'll be back in less than an hour's time. For Beyond the Bell, we'll count you down to the close on this Monday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I feel like what Jay Powell did, it was likening to when you're saying to one of your kids, I'm really going to ground you.
Okay, but...
and actually maybe doing it. Like showing him that I'm really serious.
Let's just put this into context here.
What do you mean?
Okay, the bond market, we talked about that. Back to the equity market right now. It's given the concerns about raising interest rates, in the context of the last 5 days, it's barely down.
Well, and I think this is kind of the tension within the market of kind of trying to understand what is next. I would say that, higher yields, if you're thinking about refinancing or if you're thinking about buying a house, you might think twice. Oh, yeah. And so that will have an impact on the economy. And, what Jay Powell has done essentially again today is to really step up and say, they have a dual mandate, but he sounds like he is willing to risk maybe some impact on the labor market and maybe even on economic growth to be more aggressive to get inflation down.
And that's why I'm kind of surprised that the equity market isn't reacting more negatively to this, Carol.
Well, and maybe it's because Jay Powell said, listen, I don't see a recession this year. So you have some more room to run. We've really been pricing in kind of the world falling apart.
He said the economy is very strong. He mentioned growth, and he did say he wanted to see labor force participation increase, that, we're not back to levels seen before the pandemic yet.
But look at the charts. We're still down, though, today, right? And we have been kind of all over the place. So it's kind of back and forth in terms of what the expectations. I would say that this is a really hard market environment to predict what comes next.
We are up 9.3% on the NASDAQ in 5 days.
Where are we year to date?
Well, yeah. We're down, but I mean,
No, it's quite, and this is where you get to, dead cat bounce. I'm just looking at
12%.
Okay, so we're still down, and is it just a case of that investors said, okay, we're getting more clarity from Fed Powell, Jay Powell and team, if you will, and so okay, we're still going to see growth this year. As Gina said, we're still seeing revenue growth, right?
Yeah.
So that's really important. I'm just going to say.
I think you're right.
Yin and yang. It's a tough market.
All right, let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. The Biden administration is issuing a warning about potential cyber attacks, saying the Russian government is displaying signs of preparation. Deputy National Security Advisor Ann Neuberger says some specific companies were briefed about it last week. Now they're broadening their audience.
There is no evidence of any specific cyber attack that we're anticipating for. There is some preparatory activity that we're seeing, and that is what we shared in a classified context with companies who we thought might be affected, and then we're lifting up a broader awareness here in this warning.
Neuberger says the administration wants companies to act immediately to protect their services. While Apple says it's been having DNS issues causing outages of some Apple services, the company says 15 services have been affected, including the App Store, Apple Music, and Maps traffic. The Senate has begun its historic confirmation hearings for Judge Ketanji Brown Jackson. The 51-year-old federal judge would be the first black woman on the Supreme Court. Starting things off this morning was Senator Dick Durbin, chair of the Senate Judiciary Committee, who says the court has never truly reflected the nation it serves.
In its more than 230 years, the Supreme Court has had 115 justices. 108 have been white men. Just 2 justices have been men of color. Only 5 women have served on the court, and just 1 a woman of color.
Durbin also noted Judge Jackson has been confirmed already 3 times by the Senate with bipartisan support. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. It is Monday. We are in our Bloomberg Interactive Brokers studio here on Business Week. Carol Massar, Tim Stenovic, and talking about what's going on in the markets. And I feel like, just like Jay Powell says when he's looking at the economy, when he's looking for signs of inflation or labor market, there's a lot of things that he reads in terms of trying to figure out where we are and where we're going. And one of the things we also watch is what's going on when it comes to corporate fundraising.
Yeah, Jacqueline Poe has a story out. It's really interesting. It's available on the Bloomberg terminal, all about how firms across the globe are ditching fundraising deals at a quickening pace. This is because of volatility has destabilized credit markets following Russia's invasion of Ukraine.
Right, and this is companies tapping the markets to raise money, right? And it's often a sign of optimism. They feel comfortable to raise their debt,
or
right?
Perhaps uncertainty if they don't do it.
Right, exactly. And so we've seen Tesla, the latest big name firm to scrap financing plans. It postponed a $1 billion offering of bonds backed by leases on its vehicles that happened last week. Almost 80 companies, nearly half from the United States, have put at least $25 billion worth of deals on hold since the start of the war nearly a month ago. So again, you know, there's the CEO with his C-suite team. They're talking, or he's got a board meeting or whatever, and they're talking about what they want to do. And they might just say, you know what, we're not quite sure what the impact or how long this will go on in terms of the war in Ukraine. So maybe we just hold off a little bit.
What's also interesting about this, Carol, is the geographic dispersion of this. So the caution has reached all corners of the globe. In India, Mumbai International Airport recently delayed a dollar bond deal. SS&C Technology Holdings halted a $1.7 billion buyout loan on Wednesday, and Brazil's Trocafone scrapped an IPO.
Yeah. And so you do wonder also, like deal makers in Europe are unsure about if and when roughly $300 billion in mergers, acquisitions, and listings will go ahead. You know, if you need to tap the debt markets to pay for a deal, you also don't want to do an issuance of bonds, corporate bond sale, and then nobody's interested in it. Like, that's not a good sign either.
When does the IPO market come back?
Is it that bad? I mean, things are happening.
Yeah.
We did. Remember, we recently talked with an official over at NASDAQ. Definitely slowing down. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower, 43 minutes to go ahead of the closing bell. This update brought to you by SEI. Crises and challenges highlight the power of partnership and character. Work for the common good, one community, SEI. Go to SEIC.com/banks. And now let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks fell intraday after Powell said the Fed is prepared to raise rates by 0.5 percentage point at its next meeting if needed. Dow's currently down 300 points, S&P dropped 17, NASDAQ is lower by 116. The U.S. 10-year yield jumped to 2.3%, gold is up 12, oil is surging, but Bitcoin is down by 0.7%. Among the main 11 S&P sectors, energy and materials led. Telecom and consumer discretionary were under pressure. And leaders to the upside in the Dow, Chevron, and Dow Inc., while Boeing and Home Depot led to the downside. In deal news, Berkshire Hathaway to buy Allegheny Corp for $11.6 billion. And wrapping things up, Nike reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
We thank you very much, Bill Maloney, and to hear live breaking news over you, Bloomberg type squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been watching shares of Berkshire Hathaway certainly today because Mr. Buffett's been doing some deals, something he hasn't been doing in some time. Berkshire Hathaway putting money to work. This time, Tim, buying Allegheny for $11.6 billion in cash. As we said, you know, Warren Buffett has really shied away from doing deal making in the last few years, which is something he's so known for.
He's got the cash to do it.
Yep.
The company's going to acquire all outstanding Allegheny shares, $848.02 each in cash. It's a 29% premium to the insurer's average stock price over the last 30 days. Matthew Palazzola is property and casualty insurance senior analyst. He also covers Berkshire Hathaway, so a perfect voice to have on this afternoon with Bloomberg Intelligence. Matt, take us into this deal here. Carol mentioned that it's kind of a back to what Berkshire has done, but hasn't done in a few years. What sticks out to you about this deal? Because you write that Buffett's buying a mini-me.
Yeah, I mean, I've always looked at Allegheny as kind of a mini Berkshire Hathaway. In 2012, they started buying other businesses like Berkshire does, with using the insurance float to buy these non-financials businesses and generate a return off them. It's only in recent years where those businesses have started to give a nice return, but it was very complementary to the insurance business, and it was kind of a surprising deal for me because I wouldn't have thought they would have bought a mini-me. I thought they would buy something else.
You thought because they have so much money that why not just put it to work, or what?
I thought the next company they were going to buy was going to be something we never heard of, or I never heard of. Some company that makes unique parts for machines that's the only one in the world, or something like that. Buying an insurance company, I was completely surprised because they have $70 billion of insurance premiums themselves. Allegheny has about 7 to 10, right? So it's very small. So I was surprised they would want to do something in their kind of lane, but the Allegheny business is actually very complementary. There's small parts of it, like small commercial insurance, a lot of companies are getting into, and this excess and surplus or specialty lines insurance where pricing is really good. So it's actually a nice little bolt-on for their insurance business.
Why is this classic Buffett?
Classic Buffett because he had recently talked about the market, nothing was interesting to him. So I was very surprised for him to do anything, right? And when you look at Allegheny stock, it never actually recovered all the way back from its pandemic lows. So it never even reached where it was pre-pandemic. In addition, they did pay on a price-to-book basis a little bit more, but it was trading at the same price to book in 2019. So I actually think it's a great value deal. So you kind of see this unique asset trading at a good price and pick it up.
Okay, so back to the Graham and Dodd value investing for Buffett. What does Berkshire Hathaway do with it?
So Berkshire's MO is they buy companies and they let them run. They buy the managers, they buy the teams, they let it go. I'd be very surprised if you have a ginormous insurance business that you just have another little insurance business on the side, but I think that's what's going to happen.
That's why I'm asking the question. I mean, are there, I hate to use the term synergies because classically when you have an acquisition of a company, you see it being folded into another company. It doesn't make sense to actually buy a company if you're not going to, if 1 and 1 doesn't equal 3, right? But in Buffett's case, what does he typically do?
So I don't think he hates the word synergies, and they never buy anything for synergies.
Good. I hate it too because I hate when executives use it because
it just means and it just means layoffs.
It's like such a cover, right?
Yeah, exactly. They're
Sorry,
not going to
CEOs.
They're not going to take costs out. It's not a cost play. It's not a synergy play. It's a great company that they got at a decent price. The CEO of Allegheny used to work for Buffett.
Yeah.
So he had even said, "I'm glad to have him on board." So they're not going to chop out the management team or anything like that.
Matt, the deal includes a go-shop period, so the insurer can solicit and consider other acquisition proposals for 25 days. Do we have to be concerned that somebody else might come in here, or nah? I mean, it was a decent premium, right? And the share price is, I think, trading around there. Yeah, it's trading around that.
I don't think so. I don't see a natural buyer necessarily.
Why does he do that then? Why not just be one and done?
I think it had to do it for governance reasons.
Okay.
Was Allegheny on your radar as at Bloomberg Intelligence, in one of the companies that you cover?
We didn't cover it, but definitely on our radar as kind of a sizable company out there. It's mostly a reinsurance company, which is insurance for insurance companies. So we paid attention to it in that way, but we actually didn't cover it.
I was there. I'm like, insurance, reinsurance. Like, how many levels do we go down? Matt,
who insures the reinsurers?
Exactly.
The retro reinsurers. There's another level.
See, come on. The
you know what I'm
going to
ask you now, Matt? Who insures the retro reinsurers?
Well, I mean,
nobody.
Just get about a minute here, and I'm thinking, we're not quite sure what the outlook is. Everybody's been thrown into a tizzy because of Jay Powell maybe being more aggressive. Insurance business in a rising rate environment, good, bad? Like, how do we think about this going forward?
Good. I mean, the interest rates will help investment income. As long as you have this kind of Goldilocks scenario of not too much inflation, interest rates going up, that's good for insurance companies.
All right, we're going to leave it there. Really appreciate it. Matt Palazzola, of course, of our Bloomberg Intelligence team. Right now, Supreme Court nominee Ketanji Brown Jackson delivering a statement at her confirmation hearing before the Senate Judiciary Committee. Let's take you there.
Chairman Durbin, Ranking Member Grassley, and distinguished members of the Judiciary Committee, thank you for convening this hearing and for considering my nomination as Associate Justice of the Supreme Court of the United States. I am humbled and honored to be here. And I am also truly grateful for the generous introductions that my former judicial colleague, Judge Tom Griffith, and my close friend, Professor Lisa Fairfax, have so graciously provided. I'm also very thankful for the confidence that President Biden has placed in me and for the kindness that he and the First Lady and the Vice President and the Second Gentleman have extended to me and my family. Today will be the 4th time that I've had the honor of appearing before this committee to be considered for confirmation. Over the past 3 weeks, I have also had the honor of meeting each member of this committee separately, and I've met with 45 senators in total. Your careful attention to my nomination demonstrates your dedication to the crucial role that the Senate plays in this constitutional process, and I thank you. And while I'm on the subject of gratitude, I must also pause to reaffirm my thanks to God, for it is faith that sustains me at this moment. Even prior to today, I can honestly say that my life has been blessed beyond measure. The first of my many blessings is the fact that I was born in this great nation a little over 50 years ago in September of 1970. Congress had enacted 2 civil rights acts in the decade before, and like so many who had experienced lawful racial segregation firsthand, my parents, Johnny and Ellery Brown, left their hometown of Miami, Florida, and moved to Washington, D.C. to experience new freedom. When I was born here in Washington, my parents were public school teachers, and to express both pride in their heritage and hope for the future, they gave me an African name, Ketanji Onyeka, which they were told means lovely one. My parents taught me that unlike the many barriers that they had had to face growing up, my path was clearer, so that if I worked hard and I believed in myself in America, I could do anything or be anything I wanted to be. Like so many families in this country, they worked long hours and sacrificed to provide their children every opportunity to reach their God-given potential. My parents have been married for almost 54 years, and they're here with me today. I cannot possibly thank them enough for everything they've done for me. I love you, Mom and Dad. My father, in particular, bears responsibility for my interest in the law. When I was 4, we moved back to Miami so that he could be a full-time law student, and we lived on the campus of the University of Miami Law School. During those years, my mother pulled double duty, working as the sole breadwinner of our family while also guiding and inspiring 4-year-old me. My very earliest memories are of watching my father study. He had his stack of law books on the kitchen table while I sat across from him with my stack of coloring books. My parents also instilled in me and my younger brother, Kataj, the importance of public service. After graduating from Howard University, Kataj started out as a police officer, following 2 of our uncles. After the September 11th attacks on our country, Kataj volunteered for the Army and eventually became an infantry officer serving 2 tours of duty in the Middle East. Kataj is here today providing his love and support as always. And speaking of unconditional love, I would like to introduce you to my husband of 25 years, Dr. Patrick Jackson. I have no doubt that without him by my side from the very beginning of this incredible professional journey, none of this would have been possible. We met in college more than 3 decades ago, and since then, he's been the best husband, father, and friend I could ever imagine. Patrick, I love you. William, Patrick's identical twin brother, is here as well, along with his wonderful wife, Dana. Also here from Park City, Utah, are Patrick's older brother, Gardy, and his wife, Natalie. And last, but certainly not least, my very dear in-laws, the matriarch and patriarch of the Jackson family, Pamela and Gardner Jackson, have traveled here from Boston to be with me today. I'm saving a special moment in this introduction for my daughters, Talia and Layla. Girls, I know it has not been easy as I've tried to navigate the challenges of juggling my career and motherhood. And I fully admit that I did not always get the balance right. But I hope that you've seen that with hard work, determination, and love, it can be done. I am so looking forward to seeing what each of you chooses to do with your amazing lives in this incredible country. I love you so much. There are so many others who are not here today, but whom I need to acknowledge. I have a large extended family on both sides. They are watching from Florida, North Carolina, New Jersey, Connecticut, New York, Massachusetts, Colorado, and beyond. I also have incredible friends. 3 of my college roommates came here today to support me, and I have so many other boosters from Miami Palmetto Senior High School, Harvard undergrad, Harvard Law School, and all throughout my personal and professional life. I've also had extraordinary mentors, like my high school debate coach, Fran Berger, may she rest in peace. She invested fully in me, including taking me to Harvard, the first I'd ever really thought of it, to enter a speech competition. Mrs. Berger believed in me, and in turn, I believed in myself. In the category of great mentors, it was also my great good fortune to have had the chance to clerk for 3 brilliant jurists, U.S. District Judge Patty Saris, U.S. Court of Appeals Judge Bruce Selya, and Supreme Court Justice Stephen Breyer. These extraordinary people were exceptional role models. Justice Breyer, in particular, not only gave me the greatest job that any young lawyer could ever hope to have, but he also exemplifies what it means to be a Supreme Court justice of the highest level of skill and integrity, civility, and grace. It is extremely humbling to be considered for Justice Breyer's seat, and I know that I could never fill his shoes. But if confirmed, I would hope to carry on his spirit. On the day of his Supreme Court nomination, Justice Breyer said, quote, "What is law supposed to do, seen as a whole? It is supposed to allow all people, to live together in a society where they have so many different views, so many different needs, to live together in a way that is more harmonious, that is better, so that they can work productively together." End quote. I could not have said it better myself. Members of this committee, if I am confirmed, I commit to you that I will work productively to support and defend the Constitution and this grand experiment of American democracy that has endured over these past 246 years. I have been a judge for nearly a decade now, and I take that responsibility and my duty to be independent very seriously. I decide cases from a neutral posture. I evaluate the facts, and I interpret and apply the law to the facts of the case before me without fear or favor, consistent with my judicial oath. I know that my role as a judge is a limited one, that the Constitution empowers me only to decide cases and controversies that are properly presented. And I know that my judicial role is further constrained by careful adherence to precedent. Now, in preparing for these hearings, you may have read some of my more than 570 written decisions, and you may have also noticed that my opinions tend to be on the long side. That is because I also believe in transparency, that people should know precisely what I think and the basis for my decision. And all of my professional experiences, including my work as a public defender and as a trial judge, have instilled in me the importance of having each litigant know that the judge in their case has heard them, whether or not their arguments prevail in court. During this hearing, I hope that you will see how much I love our country and the Constitution and the rights that make us free. I stand on the shoulders of so many who have come before me, including Judge Constance Baker Motley, who was the first African-American woman to be appointed to the federal bench and with whom I share a birthday. And like Judge Motley, I have dedicated my career to ensuring that the words engraved on the front of the Supreme Court building, "Equal justice under law," are a reality and not just an ideal. Thank you for this historic chance to join the highest court, to work with brilliant colleagues, to inspire future generations, and to ensure liberty and justice for all.
All right, you've been listening to Supreme Court nominee Ketanji Brown Jackson delivering a statement at her confirmation hearing before the Senate Judiciary Committee. We had gotten actually a release of what she had to say, and she did that, but then went off script a little bit at the end. So we want to go into that with our next guest.
Yeah, joining us now is Bloomberg News legal analyst June Grasso, the host of Bloomberg Law. It's at weeknights at 10 p.m. Wall Street time on Bloomberg Radio. You've been following the confirmation hearings on day one, June. What sticks out to you, not just about what we just heard from Judge Ketanji Brown Jackson, but also from what we've been hearing from senators throughout the day?
Well, what stuck out from what she said, and I think it relates to what the senators have been saying, is that she said that she decides cases from a neutral posture, and she said that's part of her judicial oath. In other words, she didn't say judicial philosophy, and the Republicans are going to try to press her on judicial philosophy, and she has not answered the questions in that way. She said that she follows the law and she has a mythology, but not a philosophy. And you heard the Republicans trying to push this activist judge concept, and some of the Republicans saying, for example, Ted Cruz said he was going to ask her questions about free speech, religious liberty, gun rights, abortion, and crime. She probably will not answer any of those questions, as none of the justices in recent history have been. Right. They don't answer the questions about their opinion about things. I mean, you could think back to the last confirmation hearing. Justice Amy Coney Barrett was, sort of asked over and over again about Roe v. Wade. And what she would say was Roe v. Wade was precedent. It wasn't super precedent, but it was precedent. And so they don't go into their opinions. And Neil Gorsuch, I remember, was asked about Brown v. Board of Education, which is a landmark ruling that outlawed segregation, and he refused to say whether he agreed with that opinion or not. I mean, that's how it's gotten with these confirmation hearings.
Is she expected to be confirmed?
Oh, yeah, I would say. And the thing was, before the Republicans started talking about this, and last week started talking about her being soft on crime, and you heard from their statements today, a lot of them were comparing Biden and his approach to crime to her at the Supreme Court hearing, which I thought was really far-fetched, but they may now, I think it might be a 50-50 vote, whereas before I thought they'd gather some Republicans, at least the ones who voted for her.
All right, we got to leave it there, but certainly something we know June will be following. June Grasso, she's host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio.
Well, back to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. It is day one of confirmation hearings for Judge Ketanji Brown Jackson. She took notes today as senators made statements. Then she gave an opening statement in which she referenced she's not an unknown to the lawmakers.
Today will be the fourth time that I've had the honor of appearing before this committee to be considered for confirmation. Over the past 3 weeks, I have also had the honor of meeting each member of this committee separately. And I've met with 45 senators in total.
Jackson, if confirmed, would be the first black woman on the Supreme Court. Tomorrow, she'll take questions from the lawmakers. The Biden administration is warning Russia is weighing a cyber attack against the U.S., and it's urging private businesses to enhance their defenses and lock their digital doors. Officials say there's not a specific threat, but there is evidence Russia is making preparations. Parts of the wreckage have been found, some casualties confirmed after a Boeing 737-800 jet crashed this morning in southwestern China. Bloomberg aviation correspondent Sid Phillip with more.
This is obviously the 737NG. This is not the 737 MAX, which was involved in those two high-profile crashes that led to its grounding. But this is the previous model, and it is one of the safest jetliners in the world. And through 2018, there's been about 8 fatal crashes for the model.
Bloomberg's Sid Phillip. China Eastern Airlines has grounded all of its 737-800s beginning tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Master, Tim Stenovic here in our Bloomberg Interactive Broker studio at Bloomberg headquarters in New York. Love this story.
Yeah, this one crossing, gosh, I can't remember if I read this Friday night, Saturday night, but I definitely spent part of my weekend reading this. Love it. Don Lim wrote this story all about Blackstone planning a fund for people with millions, not billions. Carol, you have been talking about this for months, and this is sort of seen as the holy grail for private equity, right? Is moving beyond the billionaires and the institutions and getting dentists, surgeons, and other suburban millionaires into private equity.
Well, I just remember going to a dinner with the lovely Pim Fox, who used to work here, and it was at the Friars Club, and it was literally dentists, doctors, and their investments were often in small companies, and I guess they would find out about the deals. Anyway, they were making a lot of money about this, and I feel like this plays into it.
Yeah, so inside Blackstone, plans are afoot to develop its first private equity fund targeting such individuals, who Carol speaks of. It's part of a project, it's codenamed BXPE.
Dun, dun,
the
dun.
goal, build new war chests that would eventually gather tens of billions of dollars to invest in deals piped in from various Blackstone teams. That's according to people familiar with the matter.
So this is, we often talk about institutional investors, very wealthy, right?
Yeah.
They are able to tap into whether it's IPOs or investments early on in companies. And this is private equity kind of reaching out, broadening the group of individuals who can tap into it. So we're talking about, different things in the public markets, whether it's Silicon Valley unicorns, closely held corporations.
Private markets.
Yeah. Yeah, right, exactly, private markets. So, being able to tap into that, which is what you see institutional investors and the high net worth individuals, regularly having access to.
Okay, so there's some unclear elements to this. So how many millions of dollars someone is going to need to have. Some Blackstone staff had actually hoped that they would design a vehicle for accredited investors. That's people who have as little as $1 million in net worth, but that's not on the table right now.
What's wild is adding these individuals as customers will bring Blackstone closer to a goal of running $1 trillion in assets. That's a lot. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're just getting word from Apple that its service outages have been resolved. Apple earlier said it suffered a widespread outage, knocking services such as music, iCloud, and Maps offline for some users and hobbling its internal corporate and retail systems. Apple shares are up right now by about 0.3%. 13 minutes to go ahead of the closing bell. Treasuries are extending losses, stocks falling after Fed Chair Jay Powell signaled the central bank is ready to raise rates sharply if needed to curb inflation. His remarks were carried live here on Bloomberg Radio. Two-year Treasury yields right now at 2.12%. We've got the 10-year at 2.30%. Stocks lower across the board. The S&P is down 19 right now, a drop of 0.4%. The Dow is down 325, lower by 0.9. Nasdaq down now by 131, a drop of 1%. Spot gold up 0.8%, 19.36 the ounce. Bitcoin is down 0.6%. 41,068 on Bitcoin. Oil, a major story today, beginning with a Monday surge up 7.2%, up $7.50 the barrel. We're talking about West Texas Intermediate crude, $112.31 a barrel. A barrel of Brent rallying today by 7.8%. The global benchmark now at $116.33, up $8.40 a barrel. So again, recapping, we've got the 10-year yield 2.30%, S&P down 22, a drop now of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This week, the Senate Judiciary Committee holds hearings on the nomination of Judge Ketanji Brown Jackson to the Supreme Court. Her selection fulfills a campaign pledge made by President Joe Biden to name the first black woman to the court. But Jackson would bring diversity to the bench in ways that go beyond race and gender. Not only would she be the first former public defender to sit on the High Court, she'd be the first justice since Thurgood Marshall with a criminal defense background. At the same time, she's been praised by the Fraternal Order of Police, which speaks well of her record of maintaining balance. A substantive hearing focused on Jackson's record, rather than her identity, should allow the country to learn more about a distinguished jurist. Hopefully, it will also reveal a fresh perspective that the Supreme Court needs. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10 and a half minutes left in today's trading session. We've been bouncing around certainly on the equity trade. We're near our worst levels of the session, but bonds, man, no doubt about it, selling off and yields moving up. That has been pretty consistent here, Tim.
Let's get into it with Abe Deshpande, founder and CIO at Centerstone Investors. Abe joins us on the phone from New York City. Abe, how are you?
Hi, how you doing?
Doing well, thanks. We got to talk Powell. I mean, 50 basis points essentially back on the table right now. The central bank is prepared to raise interest rates at its next meeting by 0.5 percentage point if needed, deploying that more aggressive tone toward curbing inflation than he used just a few days earlier. Carol gave us an update on the equity market and the bond market as a result. What are your takeaways from what you heard from Powell today?
I mean, everyone has an opinion about this, and most people think that the Fed's...
Wait, I was a little nervous where you were going to go with that.
No. Well, I'll say something that's probably not shared by a lot of people, which is they don't have the ability to go as high as 3%, 4%, or whatever. And the main reason is because the debt to GDP ratio, as it climbs higher, has climbed higher since the 2008 financial crisis. It's required lower and lower peak rates in order to really stall the economy. I mean, the last rate hike cycle ended at 2.5% on the short end, and debt to GDP is now 40% higher than it was in 2018. So if they can get much higher than 2%, I'd be shocked.
So you're saying because of the servicing and the cost, or what?
Yeah, I mean, there's an enormous amount of leverage. It just takes less and less of an interest hike to really spread the pain across a large part of the economy.
So wait, so I just want to make sure I understand this. I'm a little slow on a Monday. But Abe, so what you're saying is that the debt to GDP ratio is higher than it was, and as the Fed raises rates, right, the cost of servicing that debt will go up, and that will be problematic?
It is, and it's not just in the Fed, but, corporations are highly indebted, much more so than they've ever been. And, you can see already the credit indicators are starting to, even with a 25 basis point federal funds rate, you can see the credit markets already starting to kind of, sniff out some potential problem. Credit yields are high, or high yield spreads are 4 percentage points or something like that. And, don't forget now, half or more of the corporate bond market is around junk or worse rated. So it's an enormous problem. And you also have, some of the other kind of factors here. Mortgage rates are not 3% or 4.5% now on the bank rate monitor. So there's plenty of already, headwinds building that are just going to prevent the Fed from getting anywhere close to that 3 or 4% number is my guess. And what we're left in is with people have been wondering for a long time, when is the U.S. going to have negative interest rates? Well, you're going to have them soon. You're going to have negative real interest rates by, they're already negative, and they're going to peak out at negative.
Can I just ask you something in terms of the corporate debt that you said, that corporations are also highly indebted? But help me explain something, or help me understand something here too, because we've talked about a lot of corporate debt restructuring, especially as rates were low, right? We saw companies tapping debt markets to restructure that debt. You're saying, though, that debt will come true, or they'll have to reservice it, you're saying soon, and they'll have to be forced to do higher rates, and so that's problematic? Because
that's problematic.
Yeah, go ahead.
But also the fact that such a large part of the corporate debt market is at junk.
Okay.
And when you're talking about junk bonds, you're talking about default rates of 4% just on average over a long period of time. So as the economy slows, there's a larger part of the economy that is exposed to potential default. And that, of course, is a self-reinforcing cycle potentially on the downside as the economy slows down. So all of these factors kind of prevent the Fed from raising rates, to the degree that would be required to offset the inflation rates. In other words, to get to that 4 or 5% rate, which would be kind of where inflation probably is in May, June, July. It's just going to be very difficult for them to get there. So that, the good and bad of that is that, those that are expecting a bear market where stocks go down 50% or whatever, I don't think that's going to happen. People could get that fear, but more than likely the Fed's going to be prevented from raising rates to the extent that it would cause a major stock. I mean, stocks may still go down 20%, but not like a wipeout.
So what does this mean for inflation?
Inflation remains a cyclical phenomenon at this point, except for, the horrific things going on in Europe and the effect on oil, food prices. For different parts of the world, the inflation matters in different ways. In the United States, you're basically a self-sufficient economy as far as food, so it comes out of the pocketbooks of U.S. Households, but it goes into the pocketbooks of chemical producers and farmers and what have you. That does not, and also food in the United States and developed markets, it's a small portion of the total bill of the product that you pay. Everything else is marketing and transportation and brand building and all that stuff. If you're in Northern Africa, wheat prices go up by 300%. Your cost of eating went up 300%. That's a major problem for those parts of the world. So inflation is going to affect different parts of the world in different ways. And I don't think anything that I've just said is really revolutionary or all that original. It's just kind of reflecting the realities from what's happening in Ukraine. So it all kind of means that inflation is a little bit more sticky than I would have thought even 6 months ago. I thought it was much more of just a cyclical phenomenon because of supply issues and the shutdowns. But there's some tailwinds here.
You gave us some really smart things to think about, especially in a week where we're going to hear from a lot of Fed speakers. Already heard from Jay Powell today, as we've discussed. Abe, we've got to run, but hopefully we get you back real soon. Abe Deshpande, he's founder and chief investment officer over at Centerstone Investors, on the phone from New York City. I thought that was, you do wonder what will maybe prevent the Fed from being as aggressive, or every meeting they're going to go and they're going to see what the world is like.
Right. If he says the Fed isn't able to raise interest rates as much as they want to, then what does it mean for prices and stable prices?
Right. And does that correct maybe as demand, ultimately goes down? We will see. Anyway, right now, though, yields holding with that 10-year note at 2.30. Shorter end, you've got the 2-year at 2.12, and we've got equity markets bouncing around. We are definitely off our highs and lows of the session. Over to the TV team for Beyond the Bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are just 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Gina Martin-Adams, we're in the house. And as we march into that closing bell, we're going to take you beyond it. Beyond the Bell with the global simulcast. It is Carol Massa, Tim Stenovic, bringing together, of course, Bloomberg TV, radio, YouTube, as we try to get to grips with what it is, a bond market that is telling us they are fearful of growth, and Carol, a stock market that's trying to claw its way higher again.
Yeah, absolutely, right? Like trying to make sense of this. It's interesting. We just had Abe Deshpande on over at Centerstone Investors, and he said, what's going to be interesting is he doesn't think the Fed's going to be able to be as aggressive as it wants to be on rates this year. He talks about debt to GDP being higher, the cost of servicing that debt goes up, and he says corporations are also highly indebted, and that will maybe slow down the Fed in its move to raise rates throughout the year, Tim.
Hey, remarkable to see the disconnect between the bond market and the equity market as the S&P 500 is so close to closing in the green on this Monday afternoon.
And it was sort of interesting as we heard Art and sort of digesting these comments from Powell, how you're thinking, Gina, about tightening higher than the neutral rate. But I do wonder if our neutral rate is lower than it has been historically, as growth typically has been slowing a little bit more. I can't figure out that number, but certainly the comments that tightening above that rate was perhaps some of the immediate reaction that we saw within these equity markets as well.
Yeah, and I frankly just wonder where that neutral rate is, but I'd go in the other direction. I think we've underestimated the durability of growth. We've underestimated demand throughout this entire recovery. We keep forgetting that the federal government's just dumped cash on corporates as well as households, and that creates a different backdrop for this cycle than we've experienced in the last 10. So maybe that neutral rate is actually quite a bit higher, and we're all getting a little bit too freaked out about what it might do to growth.
Yes, the glass half full, Gina Martin-Adams.
Yes, I can't help myself.
We need optimism on this Monday because, well, we forget about it every now and then. And optimism as we almost near this closing bell. There's much shrieking over at the NYSE and, of course, over the NASDAQ. And we see the S&P 500 basically flat, less than 2 points lower as we continue to settle. We're less than, 0.04% lower on the S&P 500. However, we did still close lower on the Dow. Of course, Boeing being one of the key movers there, off by 0.6%, 200 points more than to the downside. The NASDAQ off by 55 points, that's 0.4% lower. The big sell-off, of course, happened in the Russell 2000 earlier. All of this wrapped up with Jay Powell sounding that much more hawkish, and it closes just down, but not by a percentage point anymore. We're just less than a percentage point lower on the Russell 2000, Carol.
Yeah, absolutely. We did see it really rough on the small caps bouncing around. We did see that buying into the close. I know, Taylor, we're going to talk about groups. You really see the standout in the energy names. Some really, really strong performance as crude oil shot up for, a third day here. And again, we continue to worry about supplies going forward.
Carol, I'm so glad that you brought that up. I'm just continuing to be astounded by an energy sector that's up more than 30% for the year. And then take a look at this, another 3.7% gain on the day. So those energy stocks certainly following crude higher, of course, as you mentioned, about 110 a barrel on WTI. Otherwise, it also looks pretty risk on, right? It's auto components, it's materials, and then you're getting some technology in there. So for some of the big gainers for our radio audience, you're up anywhere from 0.5% to, yes, about 3.7% if you're in the energy sector. We take a look at some of the losers on the day within the S&P 500, and you go down and it's some software, it is some food and staples. If we're wondering about margins and the impact on inflation, that might be my key takeaway here, as well as the consumer durables as well. Those are some of the worst performers. You're off there about 2%. 2%, Carol.
All right, so let's get to some of the gainers in today's session. My gainers really dominated by deal news on this Monday. We saw a fair amount today. I want to go to Berkshire Hathaway. I'm looking at the Class A shares up about 2.2%. Warren Buffett putting money to work, continuing to finally getting back to some deal making, which he hasn't been doing in some times. We know the news. Berkshire Hathaway buying Allegheny Corp for $11.6 billion. It's an insurance company, something we know that Berkshire has been very interested in. It's its largest deal since its 2016 acquisition of Precision Castparts, so pretty big. The target, Allegheny, no surprise, up almost 25% in today's session. It was about a 29% premium to its average trading price of the last 30 days. So Allegheny was up. And I just want to mention another deal. The private equity firm Thoma Bravo, I think, Taylor, you talked about this earlier, agreeing to buy the company. We're talking about Anaplan. The deal was $10.7 billion, and Anaplan was up almost 28% in today's session. So a lot of deal flow on this Monday, too.
Yeah, Merger Monday is like it, right? Let's talk about some of the decliners. A lot of us, I think, woke up to the tragic news about a missing Boeing plane that crashed, a 737NG, a 737-800. We're watching shares of Boeing today falling 3.6%. The company has its biggest decline in 2 weeks. We should note this is not a 737 MAX. It's the next generation 737, so the predecessor to the 737 MAX. But still, investors are a little concerned about that. Disney down 1.2% today. A double dose of bad news. The Shanghai resorts and parks have closed temporarily as the city reports record new COVID-19 infections. 3 parks there closed: Shanghai Disneyland, Disneytown, and Wishing Star Park. We do not know when those will reopen. And then we're also keeping track of what's going on with Nielsen Holdings. Shares falling today 6.9%. This after Nielsen rejected an acquisition proposal from Elliott Investment Management and Brookfield Asset Management. Bloomberg reported that potential deal last week. Shares soared on that deal. The proposal had valued the company at more than $25 per share. Shares now trading at $22.76 a share.
Keeping us focused on some of the losers out there in the equity space, let's have a look at what is losing on the FX space. Let's go cross-asset, because I'm looking at basically the US dollar stronger against most of its trading partners today. This is a Chair Powell, of course, of the Federal Reserve, once again sounding more hawkish, trying to give the signal to the market, and the dollar, it responds. We're currently up 0.25% on the Bloomberg Dollar Index. We see the yen pull back by 0.25%. You see, interestingly, moves at the euro. Of course, we'll have Madame Lagarde speaking tomorrow at the BIS. What do we see in terms of different policies being taken by various central bankers? Of course, we had Lale Ancona over at BNY Mellon a little bit earlier saying that Europe's probably going to have to pull back from any sort of normalization as we see the risks of course, Russia-Ukraine that much more factored in Europe's assets. Let's have a little look at what's happening in terms of Russia-Ukraine and what it means to the commodity space. Yet again, we're seeing that inflationary pressure that Jay Powell is focused on affecting commodities. Brent crude up 8%. We haven't seen these sorts of moves since Thursday last week, but still that volatility is there. Brent crude now at 116, WTI at $112 per barrel. We're seeing heating oil on the higher side. You really saw particular limits to the downside in terms of nickel, limits to the upside in terms of wheat. We are seeing such volatility across the assets as we continue to see no real let-up in what is furious intensity of war over in Ukraine. And I'm looking at sovereign bonds, speaking to some of the inflationary pressures. In particular, US, of course, I'm going to go across the world. Canada up 14 basis points. New Zealand, this was a global sell-off, Taylor, but you have the US focus.
It was. And, you know, Caroline, I think it's funny when I try to come here with all these superlatives and you take a look at a 2-year yield climbing 18 basis points on the day, and you would think that that would bring you a superlative. Unfortunately, that's not even some of the biggest moves that we've had this year. On that 2-year yield, 19 basis points doesn't even do it because we've had bigger moves in February and in March than we have even on this. And that just really shows sort of the volatility that we've really had in the front end of the curve. I'm going to go back and check my math, but I think on the 10-year yield, this is the biggest one-day gain that we've had going back since March of 2020. So I'll continue to make sure that that math checks out. But you are still seeing, Carol, some significant movements here as you've blown through not only a 2%, but a 2.12 here on the 2-year. And we thought 2.25 on the 10-year was a big deal. Blink and you're at a 2.30.
Yeah, I mean, listen, the moves that we've seen in this market, and I was listening to something on surveillance this morning, and it was the question question of, have we bottomed out? Have we topped out? This is what we're trying to figure out. What are the real levels that are representative of what's to come in the economy and the outlook here? And I think about this week, we're going to hear from a bunch of Fed speakers. We heard from Jay Powell today, but we're also going to see President Biden going to Europe. You do wonder if that will somehow, Tim, maybe ease what's going on over there and Europe, put an end to that war. There's just so many questions at this point that will really determine the outlook.
Look, it's remarkable that our conversation focus has really been on the global bond sell-off. And, we've talked a lot about what central banks around the world are doing. Meanwhile, we have a war going on, Russia's invasion of Ukraine, that appears to be at some sort of stalemate. But at least today, it's not part of the market narrative.
Well, and I think it may not be part of the market narrative because of what we priced, right? If you think about the S&P 500 down 15% from peak to trough, we effectively priced oil prices staying at $150 for a significant period of time if you run it through a model. So that does suggest that we priced a lot of risk into the equity market already. It has to get worse and materially worse in the commodity complex, in our view, until you see stocks really weaken further.
Meanwhile, is Europe a place to buy? If we look at the global bond sell-off, we saw that actually European stocks, we saw relatively resilient today. And actually, even though we have to say that the market moved before, of course, the deterioration of Russia-Ukraine really struck. But Bloomberg had been reporting earlier that European equities are actually higher and basically recouped most of the losses triggered by Russia's invasion of Ukraine. Yes, they're way off their highs that they hit back in early January. But nevertheless, we have started to see maybe markets trying to move past, even though I'm afraid commodity markets certainly haven't. And for me, that's where the inflation focus just returns once again.
And Caroline, you're missing, I think last week we had one of the best rallies that we've had since November 2020. So perhaps maybe not a surprise that equity markets take a breather on days like today as, again, all eyes go towards, more flattening of that yield curve, Carol.
Yeah, we'll see if that holds throughout the week. It certainly, at this point, feels like this could be, where we're settling in. But we will still see in terms of the commentary. All right, guys, that's going to do it for this Monday wrap, our cross-platform coverage on radio, TV, and YouTube. We will catch you again on Beyond the Bell, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All I'm going to say is it's really hard to figure out what comes next.
I know that Nike earnings are coming soon.
Yes. So we will break it down and go through what the company had to say. This is a great feel of, a well-known consumer brand. They sell globally, so we'll see what they have to say about supply chains. Right, and
demand, what's going on in China.
Yeah, right, a lot of commentary on that one. And I think it's just going to be a week of we're going to get a lot of starts and stops, if you will, from that commentary, and that will determine the market trade.
And then we hear from more members of the Fed, too.
Yeah, we do. James Bullard tomorrow morning. Looking forward to that. Right now, though, I'm looking forward to an update on world and national news. Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Federal Judge Ketanji Brown Jackson appeared before the Senate Judiciary Committee today for day one of her confirmation hearings to be the next Associate Justice on the Supreme Court. She promised lawmakers she'd decide cases from a neutral posture.
If I am confirmed, I commit to you that I will work productively to support and defend the Constitution and this grand experiment of American democracy that has endured over these past 246 years.
Jackson has already appeared before the committee for 3 previous confirmation hearings in which she received bipartisan support. It's unclear if that will be the case this time. She'll take lawmakers' questions tomorrow. American women are watching their wages rise faster than men. Details from Bloomberg's Amy Morris.
Women saw a 4.4% rise in wages compared to men who saw a 4.1% rise. The Atlanta Federal Reserve's wage tracker says that's the 6th month in a row that women's wage growth outpaced men's. The Wall Street Journal reports it's a shift from the trends seen earlier in the pandemic when women in lower wage service sector jobs saw steep cuts. As those businesses reopened, employers offered more money to attract and retain more workers. In Washington, I'm Amy Morris, Bloomberg Radio.
A new plan proposed by the Securities and Exchange Commission would require companies to reveal detailed information about their own greenhouse gas pollution, as well as the emissions from their supply chain. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, Tim Stenovic. And Tim, you caught that there was this great story on Nike on the Bloomberg because we are awaiting Nike earnings.
Yeah, all eyes on the supply chain, what's going on in China, any commentary around that. And interestingly enough, Katrina Lewis pointing this out to me, Nike's heading for its biggest quarterly drop since 2008. This because of supply chain woes. She writes that in an industry pressured by soaring inflation, Nike's suffering more than most as its exposure to the fallout from the war in Ukraine and supply chain issues put its share on track for their worst quarter since 2008.
Yeah, production shortfalls, transport delays in particular, make for a tough-to-predict report. That's according to Morgan Stanley analyst Kimberly Greenberger. Even if the company delivers a beat and raise this quarter, uncertainty around the drivers of underperformance in China, potential impacts from Russia's invasion of Ukraine, and inventory levels could keep the stock range bound. Did you just say that?
No.
Okay, good.
You did.
Make sure I wasn't repeating. I was reading through this.
I want to take us to what Bank of America securities analyst Lorraine Hutchison said. She recently lowered her earnings per share estimates for fiscal 2022 and 2023, citing exposure to Russia and Eastern Europe, as well as COVID-related volatility in China. Still, though, Carol, analysts, they remain broadly positive when it comes to Nike. It's got 28 buy ratings, 7 holds, 1 sell. This is according to data compiled by Bloomberg. Though several analysts have trimmed their price targets ahead of earnings, the average analyst target, it does still imply return potential of 29% over the next 12 months.
Stock's down 22%. So going into this, the investment community is certainly a little bit downbeaten on this name. So as Beth Reed, Truist Securities analyst, she put a note in last week. Did you just say?
No.
We see a compelling buying opportunity for one of our favorite long-term growth stories. So if you believe in the long-term trajectory as she does, perhaps that you see that this is an opportunity because the stock is pretty beaten up.
Yeah, we're expecting these numbers to hit in just a few minutes, and then we're going to be joined by Bloomberg Intelligence senior analyst Poonam Goyal talking all things Nike.
And I should point out our Bloomberg Intelligence, right, has some concerns about what happens in emerging market in Europe, certainly because of this Russia risk. So this is something certainly, I guess it's got about 11 billion of sales in that region. So we'll check it out. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Third quarter revenue beat at Nike. Shares are jumping after hours. Nike up now by about 4.5%. It's reporting third quarter revenue of $10.87 billion. Estimates on Nike, $10.61 billion. Third quarter Greater China revenue coming in at $2.16 billion. Closely watched metric for Nike. Estimates were for $2.09 billion. Bottom line, Nike beat. Shares up by more than 4% after hours. The Dow, the S&P, NASDAQ all declined today, but the S&P did finish well off session lows, down by about 2 points, down by less than 0.1%. Jay Powell's renewed hawkish message roiled financial markets, sending Treasury yields spiking higher as the Fed looks poised to raise rates sharply to tamp down inflation. The Dow was down 202 points today, down 0.6%. NASDAQ down 55 points, a drop of 0.4%. 10-year yield 2.29%, 2-year yield 2.11%. Spot gold up 0.7 at $19.34 the ounce. West Texas Intermediate crude up 7% today, $112.03 a barrel. Brent, the global benchmark, up by 7.7%, $116.23. Bitcoin down 0.4%, 41,159 on Bitcoin. Again, recapping after hours, a Nike beat, S&P little change, falling today by just about 2 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And you've set us up perfectly to talk about Nike. As you said, the stock rallying in the after hours. Looks like top and bottom line beat. Also, third quarter Greater China revenue was a beat. The margins were a beat. So let's get to it with Poonam Goyal.
Senior analyst for e-commerce, athleisure, off-price retail at Bloomberg Intelligence. Poonam joins us on the phone from New Jersey. Poonam, Nike shares surging in the after hours. As Carol mentioned, it beat on the top line, the bottom line, gross margin, Greater China. What sticks out to you?
Yeah, this is actually a positive surprise for us. I think they're doing better than expected across the board. What's really encouraging is the inventory. The inventory is up 15% at the end of the quarter, and that's great because I think the biggest hurdle today for retailers and brands, including Nike, is to have enough inventory to fulfill the strong demand that they're seeing. So that looks positive. What we're really looking for as we move forward into the call is guidance. They didn't provide that in their press release, but we want to know how things are tracking right now. China's had a recent outbreak of COVID cases. Supply chain seems to have tightened a little, so we'd love to hear what they have to say there.
Poonam, is it a red flag that they didn't provide guidance? Do they typically provide guidance?
They do sometimes comment on it, though I think the guidance, because it's for the fiscal year and they're in their fiscal third quarter, they have not updated. I would assume that it remains intact. Though the thing that worries me is really China. I think that's really where everyone is focused. How is China tracking now? Is there going to be a bigger supply chain hiccup? Maybe not for the fiscal fourth quarter, but what about as we move forward? Because keep in mind that there is a lag time, right, between when they order goods, get them into their stores, and actually sell them. So it could be a fiscal 23 concern for them, not necessarily a fiscal 22 concern.
Interesting. So when you say China, is it because of the supply chain or also Chinese consumer demand?
Both. It's actually both. So right now, we know that the supply chain issues are still persisting. They're not necessarily easing from everything that we're hearing. And in terms of the geopolitical tensions in China, while easier comparisons would have you believe that, things could get better sooner, there are recent COVID outbreaks in China where cities are literally shutting down as we speak.
Right.
So we have to see how the situation unfolds. But if they can provide some color into that, I think that's really what we're looking for on the call later today.
The Matt Friend, the CFO, saying in the press release, and this is a quote, marketplace demand continues to significantly exceed available inventory supply with a healthy pull market across our geographies. But we've got to dig a little bit deeper in terms of what that means.
Yeah, I think North America is strong, and I think they're going to highlight that on the call. The concern really is just China. How is China tracking? China is their biggest growth driver going forward, and everyone's eyes have been on China for the past year and will continue to be so on the call. The other thing, I'd say about them is gross margins, right? Even though gross margins were up 100 basis points in the quarter, they did call out rising freight expense, which we've heard across the board, and that too is mounting. So there are headwinds in place. The supply is getting there. They're getting the supply there somehow to meet the demand, but maybe sales could have been higher, had they had more inventory on hand.
How much of revenues is China?
So China for Nike is not the bulk of their revenues. It still is pretty small, but it is the biggest piece of their growth story, just like for the other athleisure brands.
Okay, right. It's the potential. It's where the future growth comes from, or at least they hope.
Okay, so other commentary that you're looking for from on the call today. We talked about China. We talked about supply chains. Are you thinking at all about Russia's invasion of Ukraine? Because in recent weeks there have been stories about that and about what it means for Nike in these well, I don't want to call them emerging markets, but in these markets.
Sure. Yeah, I mean, look, Russia, obviously what's happening there is important, right, and how it manifests. But in terms of revenue exposure, it's still very, very small for Nike, less than 5% of their sales in the low single-digit levels. So small. That said, I think the one other thing that we're really focused on is Adidas, when they reported recently and had their meeting, they talked about mid to high single-digit price increases in the back half of calendar 2022. Will Nike say something similar? It'll be interesting to watch if they too are planning to increase prices given inflation and the healthy demand that they're seeing.
Poonam, when we talk brands with you, sometimes it's like, okay, are they relevant? Are they doing the right things in terms of the product mix? Sometimes it's, can they produce enough supply to meet the demand? Is that really the story with Nike at this point? It's not that they've got the right product mix, they're putting the right things out there. That's not the concern. It's the other things.
Absolutely. I don't see any concern on what they can control. These are all things that are outside of their control that we're concerned about. So innovation, product pipeline, the focus on digital, that's all intact, and we think they're doing all the right things there.
It's interesting to see Foot Locker stock higher by 2% after Nike's earnings beat. Given that Foot Locker has been under so much pressure, Poonam, given Nike's move directly to direct to consumer, what's your read on that?
Yeah, I think, look, it's about having strategic relationships, and they've talked about that at length, who they want their strategic partners to be. Foot Locker remained one of them, including Dick's Sporting Goods. So I think, as long as they can get a pipeline of goods from Nike, they should be able to offer expertise in the sneakers business. Foot Locker or Dick's, they're premier places to get Nike sneakers and better quality ones versus like the department stores.
All right, great breakdown. And right now we've got shares of Nike up about 5% in the after hours. So definitely getting a pop under pressure year to date, like many brands are. But nonetheless, we're seeing it trade higher. Poonam, thank you so much. Really appreciate it. Bloomberg Intelligence, Senior Analyst for E-commerce, Athleisure, Off-Price Retail, Poonam Goyal. That's our go-to when it comes to retail, on the phone in New Jersey.
She's got to go get on the call now.
Yeah, exactly. And see what they have to say about China and supply chains. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Monday. And before we wrap up, we have a couple of segments we want to do, including what is among our most read stories on the Bloomberg. It's also the Bloomberg Big Take.
Yeah, New York City's apartment sales, they're sizzling. Popular restaurants, they're booking up. The COVID mandates facing away. But underneath that buzz, there's economic pain. Twice as many people here, Carol, are unemployed compared to seasonally adjusted U.S. average.
All right, we're going to bring in Shelley Banjo in just a moment to talk about it. She is our New York bureau chief. But first up, let's get to your top business story. Some news after the close. Here is once again Charlie Pellet.
Indeed, let's focus on Nike, Carol. Nike shares up now by almost 6%. Nike reported revenue for the third quarter that beat the average analyst estimate. Third quarter revenue coming in at $10.87 billion. Estimates were for $10.61 billion. Poonam Goyal is a senior retail analyst for Bloomberg Intelligence. She was our guest right here on Bloomberg Business Week moments ago. She is awaiting the start of Nike's conference call.
You know, what we're really looking for as we move forward into the call is guidance. They didn't provide that in their press release, but we want to know how things are tracking right now. China's had a recent outbreak of COVID cases. Supply chain seems to have tightened a little, so we'd love to hear what they have to say there.
And indeed, any headlines in that conference call, we will get them on as soon as they become available. But Nike shares after hours up by just about 6%. Apple says its service outages have been resolved. Apple earlier said it suffered a widespread outage, knocking services such as Music, iCloud, and Maps offline for some users and hobbling its internal corporate and retail systems. A down day on Wall Street, but when all was said and done, the S&P did close little change, falling by about 2 points today, down less than 0.1%. The Dow was down 202, down 0.6%. Nasdaq down 55, a drop today of 0.4%. 10-year yield 2.29%, 2-year yield 2.10%. Spot gold advanced 0.7%, 19.34 the ounce, while crude rallied 7.3% today, 112.31 a barrel. Brent, the global benchmark, up 7.9%, 116.42. So again, recapping, stocks finished lower, S&P little change, down by less than 2 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So today's Bloomberg Big Take we mentioned, also among our most read on the Bloomberg, a story about New York City. It's coming back. We know that post-pandemic. We can see it when we walk just outside our office. But there is some economic pain that is still staying with us, Tim.
Shelley Banjo is New York bureau chief for Bloomberg News. She joins us here in the Bloomberg Interactive Broker Studio. Before we heard from Shelley, I shared some of the data here. 7.6% is the unemployment rate here in New York City. It's among the worst in major cities. It also lags behind northern New Jersey and Long Island. What gives?
Yeah, so that was the exact question that I posed to the reporters, because I saw across the U.S. our unemployment rates have really come down. The U.S. is roaring back. You talk about the Great Resignation, but you don't see any of those things happening in New York. A couple of things. One is how much we're concentrated on things like tourism and restaurants and leisure. We just never got back the international tourists and the other kind of activities yet that really benefited the economy. 60% of the economy is kind of Manhattan-based, but the other boroughs are even experiencing worse outcomes there. And there is also disparity among, from a racial disparity perspective, that unemployment among Black workers is even worse than the overall average.
I do feel like as you walk around, you can feel it a little bit, right? Like there's a lot more activity than certainly from the kind of darkest days of the pandemic. But how much of is it to that hybrid work? Like it's happening. Like you and I were talking before we even got going, how many people have come back to our offices, and it's definitely busier than it was, but there's still not a lot. And that's a lot for economic momentum for this city.
Absolutely. Midtown Manhattan is like the worst place. If you look at places like Prospect Heights, where I live in Brooklyn, it's, it's buzzing, it's crazy, it's back. There's like 18 coffee shops that have opened.
Because everybody's working at home.
That's what I find so remarkable. Yeah. I live in South Brooklyn as well, and I feel like places that used to only be packed on the weekends, like a sandwich shop or something, are packed Monday through Friday now. So the economic activity has shifted from Midtown to these to outer boroughs.
Yeah, and so I think people are impatient now. They're like, okay, it's been 2 years. We need to reimagine what this economic recovery is like, because if we can't count on people all coming back to Midtown and Manhattan offices, then what are we going to do? What are we going to do with that space? What are we going to do with these workers? What about the commuters that, do or don't come in from New Jersey or Long Island anymore? And so I think that's kind of the place that we're at, that this idea that the mayor and other kind of elected officials can kind of will it back into existence isn't necessarily going to work.
So earlier this month, he went to
Wait,
Goldman
you mean when
Sachs.
Mayor Adams says get back to work?
Well, it's
not going to work?
He went to Goldman Sachs headquarters, right? Closed doors, no press allowed. But it was after he did this East Village tour, I believe, where he talked about all of these restaurants and businesses in this part of Manhattan. What's the task that he has ahead of him, and how does he pull it off?
I think it has a value. Being the cheerleader of the city has a value. Going up to CEOs like Jamie Dimon, David Solomon, and saying, get your workers back, does have a value in bringing people back. But you have to go further than that. And so I think, he's enjoying this kind of honeymoon stage of, rah, rah, let's get the city back. And it is kind of working. The COVID rates are on his side. But how are you going to transform some of these things for the longer term?
Carol, I'm thinking about, the Bloomberg Live event that we did a couple weeks ago. And, I'm speaking to the chair of, vice chair of Prudential Financial, who said, if you make people come back to the office, then you're closing yourself off to talent that, people who don't want to be working from an office 5 days a week.
Yeah, you can see it on the difference between Fridays in the city or bad weather in the city. It has nothing to do with COVID rates. It's just that people don't want to go into the office sometimes.
Well, and I do wonder if there's a major rethink, and I don't know if Mayor Adams has to think about this, that maybe it's not going to go back to where it was pre-pandemic. And so maybe you need to rethink about what will be the economic momentum of the city, at least our city here, New York City, going forward.
You are seeing some bright spots. The tech industry, for example, it is one of the only industries that have added jobs post-pandemic.
Snapping up real estate, right?
And snapping up real estate, filling that in. Also, you're seeing pot shops open up in empty real estate, as the city and state prepare for recreational legalized marijuana.
Prepare for it.
Yes, it is passed, but it is not implemented yet.
So not as much, buzzing economic activity in those spots yet. The subway, 60% to level 60% of pre-pandemic. Does it ever get back to 100%?
So we had this very interesting interview with the chief of the MTA, Jano Lieber, a couple weeks ago, where he said he is starting to rethink what it looks like if we don't ever get that back, which was quite amazing to hear that from the head of the the city subway system, saying we need to think about some way to finance the subways that aren't just reliant on riders, things like state funding and things like that. And I do think that, if you don't get the city subways back, you're going to miss out on a lot of people who don't want to go into work just because they don't want to deal with the subways.
It is interesting, though, that you have apartment sales, right, happening, and people are at restaurants. So people want to live here. They just don't necessarily want to live and work here.
Yeah, or they don't want to necessarily
commute.
Yeah.
It's not that bad. I come in every day.
Come on, commuting is not
I do
fine.
think you have to give people a reason, right? If there are events and things in the office, you can see the kind of grouping of working together here.
All right. We got to run. To be continued. Shelley Banjo, thank you so much, our New York Bureau Chief here at Bloomberg News.
Let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. Judge Ketanji Brown Jackson has made it through day one of her confirmation hearings. She listened to opening remarks from the 22 senators on the Senate Judiciary Committee and then made her own introductory statement. Bloomberg's Irv Chapman has more from Washington.
Jackson told the senators what they would learn if they read the 570 detailed opinions she wrote in her decade as a federal judge.
I decide cases from a neutral posture, and I interpret and apply the law to the facts of the case before me without fear or favor, and I know that my judicial role is further constrained by careful adherence to precedent.
For the rest, Jackson introduced her extended family and voiced her faith in religion, in democracy, and in the precepts spelled out in the U.S. Constitution. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration says it's preparing for the possibility of cyber attacks on America's infrastructure and private companies by Russia because of the sanctions put in place for the Ukraine invasion. Today, Ann Neuberger, Deputy National Security Advisor on Cyber and Emerging Technology, confirmed those concerns are real, and she's warning companies to close their digital doors.
We're doing so based on evolving threat intelligence that the Russian government is exploring options for potential cyber attacks on critical infrastructure in the United States.
Neuberger says they have no specifics on targets or timeline, but the administration did want to alert companies to a possible attack. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy Lyons, thank you so much, in our 99.1 newsroom in Washington, D.C. So, lo and behold, it's been a busy day here at Bloomberg. Lots of news, watching everything that's going on around the world. And then at 4:25 p.m. Wall Street time, a story crosses the Bloomberg terminal and whoosh, up to the top of the most read it goes.
Yeah, this is the most read in the last hour. I'll just go ahead and read the headline here. Sex Dungeon portfolio manager says assault accusers consented. A former Solomon Brothers bond trader prominently featured in Liar's Poker said 6 women who have accused him of beating, drugging, and raping them in his Manhattan penthouse consented to his treatment.
Howard Rubin's lawyer saying today the women signed agreements to engage in bondage and sadomasochistic behavior with him and were, quote, savvy streetwise women. The statement was made during opening statements in the trial of the women's lawsuit in federal court in Brooklyn.
The women claim that they were lured and misled into abusive encounters with Rubin in a room that had been converted into a, quote, dungeon. The women are seeking at least $3 million each for assault, battery, false imprisonment, and intentional infliction of emotional distress. The trial is expected to last about 2 weeks.
All right, so Rubin's lawyer, Edward McDonald, telling the jury, quote, this is a case of experienced adults. It's not the Jeffrey Epstein case with underage girls. The women's lawyer, John Balistrier, urging the jury to see the asymmetry between Rubin, 66, and his alleged victims.
The lawyer for the women saying this case is about, quote, 6 vulnerable women who lived on the edge of society, while Rubin, quote, lived at the height of society and had access to power. He had money and power. If they came forward, who is going to listen to them?
And his name may be familiar because you might recall in Liar's Poker, he was described as a brilliant young trader who studied behavioral research into which homeowners were likely to prepay their mortgages. Rubin helping create the market for collateral mortgage obligations while at Salomon Brothers in the early 1980s.
He also helped push Wall Street comp higher when he left Solomon for a $1 million a year package at Merrill Lynch and Company, later worked at Bear Stearns, and then joined Soros Fund Management in 2008 as portfolio manager in MBS. He worked at Soros until 2015.
Check out the full right through. You can do that at Bloomberg.com or also on the Bloomberg Terminal. Most read story in the past hour.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P Global Ratings pulling its ratings on Russian entities after the European Union announced a ban on providing credit ratings to people, entities, or bodies established in Russia. Nike shares up by about 5.5% after reporting quarterly results that beat analyst expectations as the world's largest athletic wear retailer overcame struggles with its supply chain and the China market. Fed Chair Jay Powell poured cold water on tech stocks today, signaling that the central bank is prepared to move quickly and aggressively on interest rates. NASDAQ down 55 points today, down by 0.4%. The NASDAQ 100 index down 0.3. S&P lower, little change, down by about 2 points, down less than 0.1%. The Dow is down 202, a drop there of 0.6%. 10-year yield 2.29%. Spot gold up 0.7%. 19.35 the ounce. West Texas Intermediate crude up 7.4%. 112.49 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master, along with Tim Stenovic in our Interactive Brokers studio. And a lot going on, as we mentioned today. Of course, those headlines from Jay Powell at the NABE conference in Washington certainly roiled the financial markets. Jay Powell saying he's ready to back half a point hike in May if it's necessary. So we did see a sell-off in equities. We saw bonds yields go up.
We kind of saw a sell-off in equities,
we did
right?
initially.
Oh, absolutely. Yeah, the NASDAQ 100, I believe, fell more than 1.4%, Carol.
Yeah.
Underperforming every major index, including the Russell 2000. So what changed?
Well, I think it's just a little bit more of an aggressive tone, right? They laid out.
What changed toward the end of the day when equity investors bought back in? Because I still sense this disconnect between the equity market and the bond market.
I think there's a lot of disconnect everywhere because I think, we talked about growth and so on and so forth. So this is just the environment we're in. And speaking of the environment that we're in, we're trying to figure out how we come back post-pandemic. We're also, of course, watching what's going on, of course, with this war in Ukraine, the Russian invasion, and there are increased concerns about cyber warfare.
Yeah, just this afternoon, President Biden warned that Russia is weighing a cyber attack against the U.S. as its military struggles in Ukraine and urged private businesses to enhance their defenses. Joining us now is Brian Palma, CEO at Trellix. It's a privately held cybersecurity company. It monitors, it researches threats, and it produces threat intelligence on threat actors and their behavior. Brian joins us via Zoom from Washington, D.C. Brian, how are you?
I'm well. Hey, Tim, how are you? Hey, Carol, thanks for having me.
We're doing
Great
well.
to have you.
Hey, I wonder how you read into a statement like this coming from the President of the United States. He said that Russia could, quote, conduct malicious cyber activity against the U.S., including as a response to the unprecedented economic costs we've imposed.
Yeah, so obviously we know it's an effective form of warfare in today's world, right? Cybersecurity can get the job done. I think in general, what we've been seeing over the last few weeks is limited novel attacks. We haven't seen a lot of new things happening, and that's caused some folks to pause, right? Because it's not as much as expected. Doesn't mean it won't happen. I think obviously the president's right. There is a high possibility that there could be attacks coming out of that region and they could be directed towards U.S. companies. But so far, we have not seen that, but all of our customers are obviously on guard.
Yeah, it's just a reminder, right, Brian, that we are living in an environment where this is a really potentially effective weapon and could really, we see, some of the stuff that's been going on in Ukraine, but it's certainly something that we need to consider whenever we're in any kind of a battle, economic or militarily.
That's right. And it is a weapon that we know will be utilized and it could have big consequences. So it's something that, we're staying close to it. Like you said, we've seen some pseudo ransomware out there that's been doing some wiping and some other things within the Ukraine, but nothing like anyone expected, but everyone's on guard.
So what does on guard mean?
Well, I think everybody's looking. So all of the cybersecurity companies that are out there, we have our Trellix Threat Labs. We're monitoring. Obviously, on the government side, we have lots of people, cyber warriors that are out there engaging, seeing, looking at the intelligence. We're seeing if there are new types of attacks, Tim. And to date, we're just seeing really pretty much a normal course of business, but that could change on a moment's notice.
So, Brian, you're not seeing anything out of the ordinary over the last 3 or 4 weeks, or perhaps nothing more coming from Eastern Europe than usual?
No, we're seeing, basically the same stuff we would normally see. Like I mentioned, we saw a little bit of pseudo ransomware, something called Hermetic Wiper that does some wiping and destruction, but nothing that we would see as off the norm.
Do you think it's because, and in this story that we have, I think this came from James Lewis, director of the Strategic Technologies Program at the Center for Strategic and International Studies, saying that the Russians have explored U.S. critical infrastructure before in very extensive ways. This is a wake-up call to people. I mean, if something's going to happen, this is your world, and you obviously dealing it with a business perspective and a corporate perspective, but the conversations, is it more likely to be some of that critical infrastructure, be it physical infrastructure, utilities, or our financial system?
It potentially could. I mean, they're going to go for high value targets. We know that. We've seen that in different industries. So I wouldn't speculate which one.
Yeah.
I also wouldn't speculate why they haven't done it so far. I think there are a lot of people speculating on that. That's not my job. I'm not on the policy side, but we're definitely ready and watching and ready to help our customers.
Hey, Brian, you and Tim and myself and a lot of other senior executives about a week or so ago were part of a Bloomberg Live event, Working Shifting 2.0, Reinventing Normal, and we talked about what work looks like post-pandemic. I mean, we're still exploring this and trying to understand it. What are you seeing? What are your expectations? And I'm curious how it compares to personally what you guys were doing pre-pandemic and what you're seeing from some of your customers and clients.
Yeah, Carol, great question. I think we were seeing, look, in cybersecurity, it's been an extremely competitive environment for a long time. So we have about 1 million person shortage across the cybersecurity market. We were also seeing a lot of this happening pre-COVID. I think what happened is a lot of folks got forced into remote work, and that accelerated the curve on having to build capabilities and make better cyber investments. As I mentioned last week, COVID, of course, was not a good thing, but in the world of cybersecurity, it actually accelerated our capabilities to protect and defend companies in this time of more remote work. So in a way, it did drive investment and capability building.
What does it mean for you attracting and retaining talent here in this environment?
Yeah, I mean, it's definitely tough. One of the things I like to talk about is soulful versus soulless work. One of the things we're seeing is that people are really thinking about what do they do? How do they spend their time? And for us, being in cybersecurity, I call it soulful work. I think as an industry, we have a real advantage there, especially as many technologists are looking and asking, what do they do? Who do they work for? What's the impact they're having in the world? We're trying to use our soulful work to our advantage to attract people to come join us in the cybersecurity world.
You're paying workers more?
Well, yeah, of course, right? That's a piece of the puzzle, but that alone doesn't do it, Carol.
Yeah.
With the Great Resignation, we're seeing a lot of competitiveness. You obviously have to pay people, but what you also have to do is have a mission and a culture and career advancement that is attractive to them as well. You got to have the full package. Pay alone won't do it.
We just talked with our New York Bureau Chief, Shelley Banjo, about what's going on in New York City. And, whether or not everybody is going to ultimately come back to the offices here in New York or whether they continue to do hybrid work. What are you expecting? Are you willing to hire anybody from anywhere in the world? And that's fine with you? And that means people can live wherever they want? And just got about 30 seconds.
Yeah, of course. Yeah. So in our industry, like I said, we've been in a war for talent for a number of years. We have to get the best and most talented people. We'll go anywhere and hire folks anywhere. That means we make certain accommodations within the business. Obviously, that's not the case for all businesses.
Right.
Some businesses are going to have a higher propensity of folks coming back to the office.
Right.
I think we're starting to see that.
Brian, 10 seconds. Do you think that means urban areas are at risk potentially? Just quickly.
I do. I think a lot of folks who work in the technology area are moving out and they're moving to places they want to be, whether they love to fish or ski or do different things. I do think we're seeing an exodus from some of the urban areas.
Great to check in with you. Brian Palma, he's CEO at Trellix via Zoom from Washington, D.C. It's been a busy Monday, folks. We're watching shares of Nike rallying in the after hours. We'll talk about it tomorrow. That's going to do it for our BW team.